Good morning. Welcome to Commodity Chat from Lotus Advisory Services in the house of www.akshayaship.com. Today is Tuesday, December 3rd, 2013, and this shoot is being done at 8 a.m. Economic data from the US yesterday was a little bit down, and profit booking dragged the markets down a little bit yesterday, even as far as Dow Jones goes. As far as the Indian economy is concerned, positive data as far as HSBC Manufacturing Index from the Indian government turned out to be positive, and this held the Nifty at higher levels, even as the INR seesawed but appreciated a little bit. First, we talk about the INR parameters. Trading at around the 62.20 to 63.230 mark. Strong resistance is now at 61.80. A break below 61.80 could see further strengthening in the INR. On the upside, strong support is now at the 63 mark, and further downside would be seen on a break below about 63. Hence, the trading range can be seen between 61.80 to 63. A breakout either side could decide the next move. Nifty is now holding at highs at around the 62.30 mark. Now, morning indicators indicate that it is expected to open on the downside by around 30 points at around the 6200, a little above the 6200 mark. Now, the trading range is expected to be seen with strong support at around the 6180 to 6150 mark and resistance at the 6280 mark. So long as 6050 to 6030 holds, buy on dips is recommended as far as Nifty is concerned. Sooner rather than later, you could see fresh highs of above 6280 to test 6330 and 6350. Now, volumes seem to be extremely low, so the clear direction of the Nifty movement is not yet ascertained. But as of now, it looks to be a buy on dip strategy. Positionally, so long as 5950 to 5980 is not violated, any dips can be used as an opportunity for making buys on the Nifty market. Now we come to the individual commodities. Profit booking over the weekend in the US markets yesterday, as also a little bit of a negative data that came out from the US yesterday, pulled down the Dow Jones a little bit. This had a sentiment overall in all the commodities. Bullions have slipped sharply lower overnight, now trading at $12.90 to $12.20 with a low of $12.18.5, down from yesterday morning by around $20. Now, support is seen at $1,200. A break below $1,200 could take it up to $11.70 to $11.50, which, as things stand now, looks to be tested. On the upside, strong resistance is now seen at the $12.45 to $12.50 mark. On the MCX exchange, MCX February gold breaks below 29,000. Strong supports are now seen at 29,600 and 28,600 and 28,400, and resistance above the 29,150 mark. Sell-on rises seem to be the strategy as of now. Silver is now trading at $19.20, with a low of $19.14. Looks to test $19, $18.70 and $18.50, with resistance above the $19.50 mark. On the MCX exchange, February silver is trading lows at around the 44,400 mark. Looks all set to test supports of 44,000, 43,500 and 43,000, with resistance above the 45,200 mark. Overall, as far as bullions go, it looks weak as of both in dollar terms and in the MCX exchange. Sell-on prices is recommended, and you could wait for fresh entries and visit our website and blogs for trading calls posted there. Copper February yesterday broke the critical support of 448 and tested the supports of 445 to 445 half mark, where it's trading at current. A break below 445 could test 443 and 442 mark, with resistance above 448. Sell-on rises seem to be the strategy as far as copper goes. Wait for opportunities for rises, expected to open at around the 446 mark. Nickel trades at the 840 to 850 mark, a break above 850 or break below 840 to decide the next trade. Zinc trades weak below 117 to test 116 and 115 with resistance above the 119 mark. Lead weak below 129 to test 127 and 126 with resistance above the 130 mark. ALuminium is a strict no trade zone, even as inventories on the LME are sharply rising over the past few weeks in aluminium, but the volumes are so low that gives less opportunity for trades in MCX Aluminium. Crude is now trading in the international exchange at 94.12 mark. On the MCX, after hitting lows of closer to 5800, went back to close at around the 5860 mark. Resistance is now at 5900, a break above 5900 to test 5950. On the downside, strong support is now seen at 5800, next downside on a break below 5800. Wait and watch is the strategy. So long as 5760 on a weekly basis is not violated, buy on dips looks to be the strategy for crude oil. Natural gas trades positive at around the 247 mark. Current support is at 244. A break and volumes above 247, 248 could test immediate resistance of 250 and about 250 to 252 to 255. The immediate range can be said to be between 244 to 248. Now, overall markets over the past 1 month has been fairly sluggish with very limited volumes, where opportunities for trades are much less, leave alone positional trades on a weekly basis. Best strategy would be to trade on intraday basis, minimum loss, and keep booking profits as and when advanced. Now, further data during the course of the week from the US are expected to determine the weekly jobless claims data, the ECB meet on Thursday, and the GDP data from the US. All this would give shape to the US economy as to how it is progressing, which in turn will decide when the stimulus is likely to be withdrawn. Now, people are talking about February, people are talking about stimulus withdrawal as early as January and up to March, but the quantum needs to be ascertained. In any case, the market seems to be discounting a gradual withdrawal of stimulus from at least March 2014 onwards. Now, for further trades and updates and trading calls, please visit our website at www.akshayashiv.com or visit our Facebook page at facebook.com/Lotus Advisory Services. Have a safe and profitable trading day. Thank you.